Okay, we are ready.
Hey, Matt Corzine, I'm so excited you keep asking me these questions about Fringe and about Service Contract Act and how it all works. And your questions give me better information, better ways to explain the math of what we're trying to do when we price on federal contracts. So here's the deal. Every time you hire an employee, you're going to pay their cost of their pay rate, their salary, divided by 2,080 hours. So $100,000 a year person divided about by about 2,000 hours a year is about $50 an hour. Once you hire a person, you're going to have their payroll taxes, and their payroll taxes are going to be for Social Security and Medicare and state unemployment and federal unemployment. Those costs, I'm just going to put them in a category called payroll taxes, 9, 10% at most. You're also going to have that employee and they're going to say, hey, don't I get some time off? They're going to expect that they get, I don't know, 80 hours a year of vacation. They're going to expect that they get 88 federal holidays. Those are part of your fringe costs. So not only your payroll taxes, but also your paid time off. What other benefits do employees expect? Well, a lot of them want you to give them health insurance coverage. They'll pay a deduction, but they expect you to provide that so they've got, coverage for themselves and their families on some kind of health insurance plan. So what I've got in front of me, I call it the SCA Fringe Rate Calculator. This fringe rate calculator is going to show somebody what the fringe rate is on regular employees with just regular fringe benefits, kind of a corporate benefit plan. And we're going to compare it to SCA, Service Contract Act. Because, Matt, that's the area where you come in, right?
That's right. I've worked a lot in the SCA world, specifically on the compliance side, and I'm really interested to learn more about the cost and bid and proposal side of the process.
Well, while we're talking about it, why don't you just briefly explain what the rules are on Service Contract Act and why it matters?
Sure. So the rules first are regarding the wage rates. SCA requires an enforceable wage rate for every job classification on the contract. There's something called a directory of occupations that lists those jobs, and there is a document called the wage determination that prescribes the wage rate that is specific to the location where the work is being performed. So the wage, paying the minimum wage or above is the first requirement. And then the second requirement is the health and welfare, otherwise often known as the fringe. This is for most contracts right now at $5.09 per hour. And the contractor has the option of either providing this amount in cash or cash in lieu, or using some or all of that hourly rate to provide benefits. And again, they can do both. I'll note that if they pay any of it as cash in lieu, it does need to be separated as a separate line item on the pay stub. And then
That's a
last
really
but
good
not least,
point.
yeah, thank you. And then just briefly, there are also requirements around SCA vacation and SCA holiday pay, as well as the paid sick leave executive order for all government contractors that apply.
So the vacation, doesn't that depend on how long the employee's been on the contract?
It does, and it's complicated when a contractor is has won and is taking over a contract from a predecessor contractor because the anniversary date for the employee that determines how much vacation they get is actually when they first started working on the contract with the prior contractor, or even sometimes two or three prior contractors ago. And that's to ensure that the employee, receives a fair amount of SCA vacation, regardless of which contractor has held that contract over the course of time.
Well, that's a really good point because I know that I have worked in this industry for a very long time. And one of the first projects that I worked on, I was on that. I was on the contract, and there was the Service Contract Act element of it. So I had to, as payroll administrator, I had to take care of that. And I remembered the people that were in that list. Well, 20 years later, I went back to the same location, and another contractor that I happened to be called in to help set up their timesheet system was still there. I ran into people on the same contract and walked up and said, "Hey, Gene, how you doing?" And I realized that that person had the seniority from the time that they started working on the contract when I worked with them to the current contractor. So they had gone from, maybe they started out at what, 80 hours a year if you're a brand new employee, and they'd built up on the schedule. So they were getting 160 hours a year. Sometimes the contractor doesn't know they have to take that into account when they bid. They don't have that information.
They don't, and they have to. Ideally, the predecessor contractor provides that as part of the transition. That doesn't always happen, as you might expect. But it's really important to get that information correct because that vacation has been hard earned by the employees, and they expect to be able to take it even if the contract has changed hands.
Oh, they were absolutely going to take it. No question about that.
Yep. Yeah.
So the holiday pay, how do they decide how many hours of holiday pay somebody gets?
This is one of the easier ones in the sense that the wage determination tells the contractor exactly the requirement, meaning the wage determination will list the holidays, and the contractor must provide holiday pay for those days. If for some reason the employee is required to work on that day, that's okay. Certain contracts require obviously working on holidays. The contractor just has to provide an alternate holiday instead.
Well, that makes sense. So it's 88 federal holidays right now. So that one's a pretty easy one to figure out when you're doing your pricing activity.
Yes, correct.
I think the kicker, though, is sick leave. People don't always read the instructions, but how much sick leave are they entitled to?
It's a great question. So it is 56 hours. It accrues over the course of the year. So the accrual is a gradual accrual, which is an important distinction from SCA vacation. SCA vacation vests on the anniversary date with the contractor. So technically, when a contractor wins a contract and hires the employees, even if they've hired employees that have, decades of experience on the contract, the vesting of that doesn't occur until that first anniversary date when it rolls around. So that's just an important distinction of how the vacation accrues versus the sick leave. Also, the sick leave can carry over from year to year, but the SCA vacation cannot. It has to either be used or paid out by the subsequent SCA anniversary date.
I didn't even know that. And I've been doing this for a very long time. So you've corrected me on a few things already.
Mhm. It's
So,
particularly, I'll note, Jenny, it's particularly challenging for contractors who maybe have already been doing business, but for non-SCA contracts, and they've set up something typically referred to as a PTO or paid time off policy that encompasses vacation and sick time. And that's perfectly acceptable and a standard practice in the non-SCA world. But contractors have to be really careful to not just assume that their existing PTO policy for non-SCA or exempt employees covers or meets the requirements for the SCA.
that's a really good point because they want to have policy. It needs to be clear to the employees, but it has to incorporate the rules of the SCA, which they may not fully understand.
Exactly.
Okay, so back to the math, if that's okay.
Yes, please.
We started down here and we were talking about payroll taxes. Now we've mentioned holiday pay, vacation pay, sick leave pay, and the group benefits, workers' comp, and 401k plan. So, what I was describing when I first started talking is, let's pretend that I have a bunch of IT experts and I'm having them work on a regular government contract. It's not Service Contract Act, there's no special rules. I give them corporate benefits, everything's great. I pay them let's just say in my example, it's $50 an hour for that person, about $100,000 a year. And that would be for a database analyst or somebody like that. When I create a bid, I have to say how many productive hours they work. Productive hours is usually 2,080 hours, which is 52 weeks times 40, minus the hours they'll be taking as leave.
Hmm.
And sometimes the proposal will tell you information or the RFP will tell you that information. But in this case, I just said I'm going to take 2,080 minus 88 hours for holiday and 80 hours for vacation. Like you said, sometimes it's called paid time off. And my corporate person, I don't have any requirement to give them sick leave. Most organizations in federal contracting don't have a specified bucket for sick leave. They tend to say, we're going to give them a chunk of paid time off. And if they want to keep that paid time off and get paid at the end of the year, we have a policy for that. They could carry it over. There's different rules, but whatever. I'm paying that person at $50 an hour. Their annual labor cost is 104. That's their annual salary. That's what it would have gone out in their offer letter. The amount of money that's considered direct labor cost is the $50 an hour times the productive hours per year. So it's 50 times 1912 is 95,600. Let's pretend that monthly I pay them group insurance. So $1,000 a month, it's going to end up being $12,000 a year. And I just base that on looking to see what I felt like a company might typically pay for the company's expense of a health insurance premium. That means that the employee is going to pay the balance of the expense on their family plan. So it depends on deduction rules and things like that. So down at the bottom, I'm going to show you how to calculate a fringe rate. I take
Hmm.
payroll taxes, which is 9% of the 95,600. I take 88 hours a year times $50 an hour. That's 4,400. Vacation is only 80 hours a year because I'm just assuming this is a brand new person and they walk in the door and I only give them 80 hours because that's my policy. They don't get any sick leave. I'm going to pay annually $1,000 a month for them times 12 months for group benefits. And maybe there's some cost for workers' comp, and I just made up this $500. I doubt it's even that high. I might have a 401k plan that has 401k matching. Otherwise, there wouldn't normally be any cost, but I just chose to put zero in here to try to make this understandable. So what it tells me is when I take my fringe cost, which is the sum of all of this, 29,504, divided by what's called the fringe base, this 95,600, my fringe rate, $30.86. And mathematically, it matters very little if this is 65 bucks an hour. It changed then because my people are more expensive and my health insurance cost didn't go up very much, still $1,000 a month. If I make this 40 bucks an hour at somebody making 80,000 a year, it changes a little. So you kind of need to know what the average rate is for your workforce. But there are bigger ways to bid this. I'm just trying to give a simple example. So Matt, are you with me so far?
I feel like the light bulb has finally clicked on the fringe pool component. When I hear fringe, I think of the health and welfare fringe, which is different than the fringe pool that you've just walked us through.
Okay. So this is why it makes such a difference because people are going out and bidding contracts and they are bidding a contract that maybe has a little checkbox that says this is a Service Contract Act. And they've gone and looked at the wage rates and they figured out what the wage determination says, but they haven't really comprehended the impact of the $5.09 an hour. So let's walk that through. So a fringe rate or a hourly rate for somebody that's on the wage determination list, they'd have job titles like technician, clerical, admin one, admin two, admin three, things like that. And I just picked $25 an hour to make this math simple. They're going to work less hours per year because they are also going to take all their sick leave. And by the way, when you work with a workforce that is Service Contract Act, many times they tend to have more, they'll take all their leave. You can't blame them. They're hourly workers. They do work some overtime where they get paid time and a half, but they basically are there to do a job and they will accept their pay and they'll do a good job. But you just need to know that they will typically use up all their leave because they've got a lot of things they have to take care of, just like anybody else. So they're going to have 88 holidays. That's no different between that and the other. And by the way, these numbers, I don't know if they belong there or not, but I shouldn't hit undo in the middle of this. Now I got to go fix it. Pay no attention to the woman behind the curtain.
Mhm.
I guess I'll just put it back.
Okay. It's all
Okay.
good. Yeah.
All right. So they get 88 hours on their holiday or on their vacation. I'm just going to say we give them 80 hours. It could be higher, as we mentioned, because of the seniority. But they get 56 hours a year for sick leave. So that right there makes a difference in the math that we're coming up with here. And so their annual labor cost, theoretically what they would make if they worked the full 2,080 hours is $52,000. The direct labor cost is their hours worked times the 25 bucks an hour. They're going to have the health and welfare at $5.09 an hour. And I guess that changes. Does it change every year about the same time, Matt? And how does that work?
It does. We are coming up on new health and welfare rate season. It's usually late June or July that the Department of Labor announces the new rate. However, the rate is not effective. The new rate is not effective on the day of that announcement. The new rate is effective on each contract's anniversary date. Typically, every year there are some contracts where the rate would be effective every 2 years. So contractors really have to stay on top of that contract anniversary date to know when the new health and welfare rate will apply.
I didn't know that either.
Yeah.
So I thought that whenever it went into effect, we were supposed to implement it immediately. So thanks for clarification on that. And the other thing I think is I felt like I remember somebody telling me, well, we have to wait for a mod to be issued on the contract to give additional funding because it was a cost plus contract. And so sometimes there would be a delay between the time where we were supposed to give the money and the time it was authorized on a mod. So sometimes we ended up having to go back and create retroactive adjustments on the employee's paycheck to make that correction.
That's correct. Yes, the contracting officer should incorporate the new rate through a mod effective on that contract anniversary date. As we all know, that doesn't always happen in a timely manner, and that's when, like you mentioned, Jenny, those retroactive payments can happen. It's not a crowd pleaser to the employees because they would like to receive that raise, if you will, as soon as it's effective. So it's good to stay in communication with your CO on these things.
Yeah, and you're pointing out something else that's important to the employee. That $5.09, if they work all 40 hours for the week, that's a couple $100, and that's important to them.
Absolutely, and particularly again, if they're receiving their any or all of that as cash, but also it goes a lot farther in terms of covering more of the benefit cost as well. When that health, if the health and welfare is being used to pay for some of the benefits, then it can pay for more, and the employee's cost share for, say, their medical insurance will be less. So either way, it's a really important for the employee to get that as soon as possible.
Well, to them, they're like, I got a raise, my boss didn't give it to me,
Right, right.
which is not a good conversation to have wandering around the break room.
Not at all. No.
Okay. So right now, our SCA employee, the way I've got it going is we've got our group benefits. And the way I calculate the group benefits, I didn't show it here, but it's the productive hours, the hours they work,
Mhm.
times the $5 an hour. So it's $9,000, $9,447 of benefit costs that if you don't know about these weird rules, you might underbid the contract and lose money if you won.
That's true.
But
And,
let me
and
keep going with this.
yep,
Okay.
please.
So our payroll taxes, I'm just leaving that's 9% of the direct labor cost. And it could be 8.47, but we're just using 9 because that's a good round number. They get the 88 holidays, 8 hours of holiday at 25 bucks an hour, 2,200 bucks. Vacation is 80 hours a year in this example. So that's $2,000. And you know what? I just discovered another goof in my own spreadsheet. What I forgot to do is say they get $56, 56 hours a year at $25 an hour.
Hmm.
That made my fringe rate even more different. And that's what we're looking for because when you're doing Service Contract Act and you're doing the pricing or the costing for that type of work, you really need to understand how the math works because you can see I'm a professional and I did it wrong. There's a lot of elements. So this little map that I got, the SCA Fringe Rate Calculator, is really to show people that need this information how it is to be calculated, and also to let them know that if they have IT people and they win a Service Contract Act, we don't want to just use an average rate because you'll lose money on the SCA employees. Or if you used it, if you didn't have a separate SCA rate, the problem is you would bid higher than you should on a contract for your IT services firm. Anyway, there's our group benefits, and all I did here was reference that number up here for the $5.09 per hour for 1856 hours. And I just said the workers' comp is 750 just because inside the wage determination, because these are technical workers, sometimes they're in a specialized areas where their workers' comp is higher. Like the people that climb up towers, putting in communication equipment, their workers' comp is a lot more expensive. Where people that are doing IT services, they're in an office sitting at a computer. You know, there's not a lot of workers' comp to that. So what it did again is it took the total fringe pool for that $25 an hour person and it calculated 19,973 divided by the 46,000 and came up with the 43% fringe. So when you're doing federal contracts and you're doing pricing, because there's a request for proposal and you're pricing for it, there are spreadsheets that the government will issue, but they don't tell you these nuances. And that's why, even though Matt and I both have worked with Service Contract Act information, we don't both know the whole side of it. And even our little session today taught us both something new that we didn't know. So, if this is the kind of information that you need, that you're looking for more information on, because a lot of people go out there and Google, what is SCA compliance? Because they don't know. The person you need to talk to is Matt. Matt, tell them a little bit about Simple Fringe and how they get to you.
Yeah, thanks, Jenny. Simple Fringe is a software that supports small government contractors to help them ensure that they are compliant with the SCA health and welfare, or otherwise known as fringe requirements. There, most contractors do this compliance tracking on Excel spreadsheets, which has its own challenges in terms of ranging anything from just an Excel error all the way up to data entry mistakes. And the Simple Fringe software is built to ensure that all the boxes are checked. And in the event of a DOL investigation, which they do happen, you want to have all of your ducks in a row and be able to present the information to the DOL auditor as quickly and kind of concisely as possible, rather than scrambling around and pulling things together. It's not a good look in a DOL audit if you're scrambling and providing information that looks like it's been pulled together in the last minute.
Well, on top of it, that whole feeling of when you get a notice from Department of Labor that they want to come and look at it, I feel like sometimes that happens because somebody made a call.
It is. I mean, the DOL at a minimum will, if they receive a complaint from an employee, at a minimum will place an exploratory call to the contractor. That may not necessarily be a full-blown investigation, but at a minimum it will be a phone call. And the results of that phone call, if the investigator from the Department of Labor feels like something is not up to par or out of compliance, then it will progress into a full investigation. And it just For contractors that I've worked with over the years, it becomes a part-time job managing that DOL audit, not to mention something that's kind of hanging over the organization's head until it's resolved, which can take, anywhere from 6 to 12 months.
Well, they don't necessarily have to be having a labor attorney to help them, though, right?
No, generally no. I mean, generally what the DOL is looking for is that the contractor has a system and a process in place to ensure compliance, right? Having a software that produces these records showing the compliance for the health and welfare will provide the first some reassurance to the DOL that the contractor is taking compliance seriously versus maybe a spreadsheet that's thrown together at the last minute. And then second, it's built in such a way that the auditor can easily follow the math and see exactly how the contractor is compliant.
Well, I think you're absolutely right about what they're going to expect and who's going to have to be involved. It have to be your HR person, whoever does payroll. Obviously, the executives of the company would have to be involved in that to make sure that the response is quick and complete and accurate whenever you're talking to a federal agency.
Absolutely. It's like any other audit you want to provide, the required information, but nothing more and nothing less.
Well, so Matt, I put this together because we were having a conversation and you just said, "Hey, Jenny, can you really explain to me how Fringe works and how it goes together?" And I said, "Sure, I can do that." So we created this little spreadsheet to explain it to other people. And on my website, solvability.com, I've got it listed so you can take a look at it. And if it's something of value to you, I've got a way you can download it for a fee and see if it's something you can help with. But I help people with pricing and indirect rates on federal contract pricing strategies because I think the most important thing that I can help a business owner in federal contracting understand is the math so that they don't overbid and lose the work, but they don't underbid and really not make the money they deserve on the contract. So I went ahead and put my information in here on how to reach out. And if people have questions, we would love to hear from y'all. And you can certainly find us on LinkedIn and other places. What else should we say as you wrap up for us, Matt?
Just thank you, Jenny, for putting this calculator together. It's really helpful. I understand things a lot better than I did before we walked through it. And again, if anyone needs compliance support around SCA, our website is simplefringe.com. My name is Matt Corzine, and I'm happy to help.
Well, me too. And I'm glad we put this together. So we'll talk again on another session soon.
All right. Thank you, Jenny.
Thanks, Matt.